Have you ever wondered what it really takes for a giant, established company to totally reinvent itself? Well, today we're going to dive into the story of how Capital One, one of America's biggest banks, was facing a billion-dollar crisis. And instead of just patching the leaks, they rebuilt their entire company from the inside out, using this really powerful new kind of AI.
But first, let me ask you something. Think about the last time you bought a coffee, or anything. In that tiny little moment right after you tap your card, literally faster than you can blink, there's this invisible, high-speed battle going on, and we're about to show you what's really happening in that split second.
So to give you a sense of just how fast this is, the average human reaction time, like to catch a falling object, is about a quarter of a second. But in just 200 milliseconds, Capital One's AI can process a ton of information and make a super complex decision about fraud. It literally decides before your brain is even registered that the tap happened. Insane, right?
So, you might be asking, why on earth did they need this kind of superhuman speed? Well, it's because the bank was up against a massive billion-dollar problem, and it came in the form of two major threats that were hitting them at the same time.
Just look at this number for a second. Before this whole AI revolution, Capital One was losing nearly $850 million a year just from fraud. That's not just some rounding error on a spreadsheet. That was a full-on financial hemorrhage that was threatening the whole business.
The thing is, it was kind of the perfect storm. On one side, you had these really sophisticated criminals who had figured out how to easily trick their old systems. But on the other side, their own outdated models for deciding who gets a credit card were not only turning away perfectly good customers, but they were also constantly annoying the ones they did have with false alarms. And all this was happening while these smaller, faster fintech companies were starting to eat their lunch.
So faced with this crisis, Capital One's leadership didn't just decide to, buy some new software. They made this incredibly audacious bet to fundamentally change who they were. They decided to stop being a bank that uses tech and start being a tech company that just happens to be in banking.
And this was no small project. We're talking a complete overhaul. They decided to build their own custom AI from the ground up. They completely shut down all 8 of their physical data centers and moved everything to the cloud with AWS. They ballooned their internal tech team to over 11,000 people and then poured more than $2 billion into the whole thing. This was a massive, all-in bet on where the future was headed.
So what did that enormous investment actually create? Well, something totally new inside the bank. Let's meet the real heroes of this story, the AI agents that became Capital One's brand new digital workforce.
So, what is an AI agent exactly? We're talking about something called Agentic AI. And these aren't just simple programs following a script. Think of it like a self-driving car, but for finance. These are basically autonomous digital employees that can act on their own, make really complex choices, and, this is the key part, they learn from every single transaction. They just keep getting smarter 24/7, and they never need a coffee break.
So first up is the fraud detective. In that 200 millisecond flash, this agent is looking at hundreds of different things. Where you are, the store, the time of day, your normal spending habits, and it's spotting these fraud patterns that are so subtle and complex they would be totally invisible to even the best human analyst.
And its partner in crime is the credit underwriter. Now, this agent was designed to make the whole system fairer. It looks past just a simple credit score and analyzes all this other data, like if you have a solid history of paying your rent or your phone bill on time. And this lets it make way more accurate decisions, which opens up access to credit for people who are kind of unfairly shut out by the old way of doing things.
Okay, so after this $2 billion bet and a complete corporate makeover, did it actually work? Well, it's time to check the scoreboard and see what the data says.
The results were, honestly, they were staggering. The fraud detection rate just skyrocketed from 68% all the way up to 94%. But look at this other number, the false positive rate. That's when your card gets super annoyingly declined when you're actually trying to buy something. That number just plummeted from over 9% down to under 2%. So think about that. The bank got safer and the customer experience got way better, all while they started saving over $500 million a year. That's a huge win. And the change on the credit side was just as dramatic. The average time it took to get an answer on an application dropped from over a week to just 2 days. The number of people who got an instant yes or no nearly tripled, and the AI's ability to predict who might actually default on a loan got a lot better, which just makes the entire system safer and more efficient for everybody.
So what did all of this feel like for the customers? Well, here's the proof.
The bank's Net Promoter Score, which is just a fancy way of measuring customer satisfaction, it jumped by 24 points. Now, in the world of customer service, that is a massive, massive leap. It's pretty much definitive proof that customers really felt the positive change.
Okay, these results are obviously impressive, but a change this big always brings up that one critical question. What happened to the people whose jobs these AI agents were designed to help with? Were they all replaced? Let's hear what it was like from the folks on the inside.
So this is Sarah Chan, a senior fraud analyst, and you can imagine she was probably worried about her job. But she found that the reality was totally different. The AI just took over all the boring, repetitive cases, which freed her up to become more of a high-level detective for the really tricky fraud schemes. As she puts it, they became a team that could catch stuff that neither one of them could find on their own.
And it's the exact same story from Marcus Rodriguez, a credit underwriter. He was worried that AI would make his job feel cold and robotic, but he said the exact opposite happened. Because the AI was handling, 70% of the easy, straightforward cases, he could spend way more of his time and empathy on the complicated applications that really needed that human touch.
So this whole journey offers some really powerful lessons that go way beyond just the world of banking. Let's try and boil down Capital One's incredible transformation into a few key insights that could apply to almost any industry.
So, what can we take away from all this? Well, first, start small and then scale up. Capital One didn't try to change everything overnight. They ran small tests to prove it worked. Second, focus on collaboration, not replacement. The whole goal was to make their employees better, not to make them obsolete. Third, you've got to build for compliance from day one, especially in a regulated world like banking. Fourth, you have to monitor this stuff constantly. An AI that's always learning is never really finished. It needs constant oversight. And finally, and this might be the most important one, the company culture is just as important as the computer code. They had to change the entire mindset of the company for this to actually work.
And that brings us to one last big question to chew on. As these AI agents start joining more and more teams in pretty much every industry, who gets the next promotion? Is it the human, the AI, or is it the human who figures out how to be its best partner? Definitely something to think about.